Your daily finance facts. What is a digital bond? Well, first thing first, what is a bond? A bond is essentially a fixed income instrument that is issued by a government or a company to raise funds. The bond issuer, who is the borrower, issues the bond documents, and this contains the terms of the loan. It also contains the principal amounts, it contains the coupon, which is the interest, and it also contains the maturity date, amongst other things. We know that the coupon rates, which is the interest rate, that is used to calculate essentially the lender or the bondholder's interest at the end of the day, which is the benefit that they derive from taking participation in the bond. Now, what is a digital bond? A digital bond is essentially a type of bond that is issued using blockchain technology. The bond is issued through the use of an e-bonding system that is then uploaded on an automated online tendering program. Now, we know that it contains security protocols that enable the bondholder to know that the bond has been signed, sealed, and issued. Now, what are the obvious benefits? We know that the obvious benefits on the face of it is the streamlined and automated process. Also, what usually happens is that digital bonds do away with third-party financial institutions and clearing systems, and this means that it translates into lower costs for the bond tendering process. It also ensures higher levels of transparency and increased speed. Another thing that we also see is that in the bond ecosystem, there's usually the tendency for improperly executed or completed bond tenders, which usually results in disqualification of the tender process. Now, what we also know is that during the entire life cycle of the bondholder does not have to hold the bond. The bondholder can also transfer its rights to a third party who is interested. And what a digital bond does away with is the need for this interested investor to have to start going to the bond issuer to confirm the legitimacy of the bond, because the bond has in place embedded security programs that ensure that it is reliable and that it is safe. Now, what are some of the challenges that we may have with digital bonds? Well, we know that when it comes to technology generally, one issue that we might have is things such as cyber attacks, and more importantly is the legislative regime around digital bonds. For a while now, regulators have found it difficult to actually regulate securities that are distributed on blockchain technology. Although some regulators such as France, who as far back as 2017 has already created regulations in place for registration of securities that are issued on decentralized technology, but some regulators have not caught up. The Securities and Exchange Commission in Nigeria, as far back as about 2020-2021, already released regulations on the custody and offering of digital assets. However, it's uncertain how this would play with digital bonds, as we haven't actually seen specific real-life examples of digital bonds in the Nigerian market. But it's still good to know that our regulators are thinking in that line. So what we're going to see is that there are questions regarding the platforms that would issue and also trade these digital bonds from a legal perspective, also in terms of custody of these digital assets, and also the utilization of these digital assets as collateral in transactions. So these are the sorts of issues that we see when it comes to digital bonds, or that we could potentially see as they become more widespread. However, it's important to know that digital bonds, although they are getting more popular, they are not new. As far back as 2018, institutions such as the World Bank, the European Investment Bank, USB, and some other companies have already started to issue digital bonds. So it'll be interesting to see if we can see a few examples of digital bonds in the Nigerian and just generally across the African markets in coming years. And that's your finance facts for today.